Imagine this. You deposit $1,000 into your bank. You think it sits there, safe, untouched. But what if I told you your money is already gone? Not stolen, not hacked, but legally created out of thin air. Here's the paradox. Every dollar in your account exists, and doesn't exist at the same time. So the question is simple. If banks don't actually keep your money, what are they really selling you? For most of human history, money was physical. Gold, silver, coins you could hold. Banks were vaults. They stored wealth and charged a fee for protection. But in the 17th century, something changed. Goldsmiths noticed a pattern. People rarely withdrew all their gold at once. So the goldsmiths made a decision, a quiet one. They began lending out gold that wasn't theirs, and nothing collapsed. At least, not immediately. That experiment became a system we now call fractional reserve banking. Today, in the US, banks are required to keep almost none of your deposits in reserve, sometimes zero. Here's how modern banking really works. You deposit $1,000. The bank keeps a tiny fraction. Then it lends the rest. That loan becomes someone else's deposit, which gets lent again, and again, and again. Like a mirror hallway, $1 reflecting into 10. This is not saving, this is money multiplication. Banks don't lend money, they create it. With a keystroke, a balance update, a promise. And here's the lie. You believe your money is waiting for you. The bank knows it can't pay everyone back at the same time. The system survives on one thing only: faith. History shows what happens when faith disappears. 1930s. Banks collapse. People rush to withdraw cash that doesn't exist. 2008 Lehman Brothers fails. Global panic spreads in hours. 2020. The world freezes. Central banks print trillions overnight. Every crisis reveals the truth. Banks are stable until they aren't. And when they fall, governments don't save you. They save the system. This system reshapes everything. Inflation isn't an accident. It's a feature. Wealth concentrates upward. Debt becomes permanent. Saving becomes punishment. Your money loses value. Assets rise. And those closest to the printer win. This is why inequality keeps growing, and why trust keeps shrinking. Fractional reserve banking isn't evil, but it isn't honest either. It trades stability for growth, truth for convenience, reality for confidence. The system works, as long as you don't question it. Because the moment people understand money, they stop believing the lie. So here's the real question. If everyone demanded their money tomorrow, what do you think would happen? Comment below. Because this conversation matters, follow for more details about finance.